All right, well, welcome everybody to our VectorVest International Online Forum. It's great to see all of you with us, and we're delighted to have you here. This is Stan Heller broadcasting from Lethbridge, Alberta. Wonderful to be with you. We have as our guest today, you can see Dr. David Paul is with us, the Managing Director for the UK. And he's going to come on and talk about the US and UK markets. And then we are very delighted to have back with us Susan Hayes-Culleton, our keynote speaker today, with a presentation on the five ways to measure stock performance, which is going to be just invaluable to us at this time. So great to have you all with us. Lovely to see you. I do want to express our thoughts and prayers for all of our friends in Florida and up and down the East Coast, and including Atlantic Canada, for the devastation that's happening there or has happened already there. We certainly send all our best wishes and thoughts on that. But we have a lot of great content and information to share with you today. So again, we're going to move ahead and welcome everybody in, and away we go. And I see I've got to turn this way. Get used to this webcam. Okay, so we'll go ahead to the next slide and welcome everybody. I'll bring in David and Susan a little bit later, but in the meantime, we'll go ahead and just quickly look at the agenda. And there it is on the screen now. So we're going to have about a 40-minute global market forecast, take a look at what's happening with our VectorVest color guards around the world in all 5 countries that we have service. And specifically, David Paul will speak about the US and UK, and then we'll have Susan come on and speak about 5 ways to measure stock performance, very timely presentation. I want to let everybody know that the replay of this recording will reside on YouTube. So it's available almost immediately after the webinar, right on the same location or link that you use to access the recording right now. And on Monday morning or Monday afternoon, probably mid-afternoon, you will get the slides from VectorVest as well. All right. Everybody's all good? You can all hear me okay? Yes, Ted says has sound. So that's great. Looks like we're all good to go. We've got Kalispell represented. We've got Belgium. Okay, all is good. I'm going to move on. Just a quick risk disclaimer. I think we're all very aware that there's risk in investing. We've certainly had a difficult and choppy year in 2022. So just know everything you're going to see in here today is provided for educational purposes only, should never be considered as investment advice. And the information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. So we've got a few people from Belgium. That's awesome. Great to have you with us. And Calgary here, just north of us in Lethbridge. And again, it's Stan Heller. We're broadcasting, and it's a little overcast today again. Second day, we went from 30 degrees centigrade, I think on Friday, and then kind of almost freezing yesterday or today. All right. I hope everybody enjoyed the stock market masterclass. You can still access that until November. So you can just go to YouTube, VectorVest YouTube, and look up the stock market masterclass. And you can see there's slides available there. I don't believe the special offer is still available for new subscribers. It was a very generous offer. I guess you can always give this link a try, vectorvest.com/MC bundle. But there was some urgency to get that ordered yesterday. But we still have very good offers for trial subscribers. So that was all there. And let me just let you know the uploads is right here. So that's where that comes. And you can download the presentation slides, vectorvest.com/MC slides. And these were all the presentations that happened yesterday. And just a quick poll on a scale of 1 to 5, 5 being a home run, and I guess 1 being a strikeout. How well did you find the VectorVest Masterclass as far as its effectiveness and helpfulness to you, and whether you found it enjoyable? Maybe just chat in the chat box on a scale of 1 to 5, how you thought about it if you were watching. So I see quite a few 5s coming in. That's awesome. And lots of people were watching, so that's great. John's a 4, Ron a 4. And, I'm sure there was some topics that maybe attracted more interest for you than others. Neil says it was a great refresher. That's awesome. Good to see you, Neil. Yeah, Doug says didn't catch it all, but it was a 5. And of course, now you can go back and watch it again. So that's pretty terrific. All right, well, let's get on to our market review and looking at the color guards. So I've boosted up here Canada and the US color guards, so you can see them together on your screen. And I guess in bold red up at the top, you can see that the Canadian market represented by the VectorVest composite is down 19.34% year to date. Now, yesterday we did have 3 yellow lights across the top, so a little bit of an up day yesterday. The buy-sell ratio improved from 0.07 to 0.08, and the MTI just kind of stayed flat at 0.53. So we're definitely in that confirmed down call, and those confirmed down calls, in just the way they helped us in 2021 to make money in a very long bull market, they have helped us protect our profits in 2022, where we've seen the confirmed down calls in place for all but a few days. And the strategy section in VectorVest says the global economic slowdown, concerns on top of faltering healthcare shares sent the price of the VVC lower the last 5 trading days, and the market continues to look for a bottom. So I'm sure you'll hear that theme a little bit today. In Canada, we also have that bullish divergence. It's a very small divergence, but it's there between the price and the RT and the buy-sell ratio. I'll show you that on the market timing graph. And VectorVest says, with uncertainty and volatility still surrounding the market, let's take it one day at a time. Watch the color guard, be cautious. For myself, I tend to like to step in when the market is this slow and nearing that bottom, but waiting for a green light, such as we had back here, with follow through the next day, is an ideal situation. And on the US side, and David will cover this in much more detail with his presentation, but it's been a difficult year. The composite in US is down 26 points. Red light again in the price column yesterday, and the buy-sell ratio flat at 0.05, and the MTI 0.38. So we're still struggling, and you can see the 1-month losses in all 5 of our markets. Canada down 6.9, US down 8.9, Australia 5.6, Europe 8.2, and the UK 6.0. That was just a 1-month snapshot. So that's what's happening in September. And then if we look at Australia, you can see just the same situation, lots of red in the color guard. The asterisks in the price column at the top means there's just momentum behind that downward move. Buy-sell ratio 0.10, MTI 0.60, confirmed down call. And in Australia, it's more on the recession fears. Again, RT, BSR, and MTI significantly lower, and we're searching for a bottom there in Australia and the other countries as well. And Europe down 22% year to date, and yellow lights across the top, so maybe things are easing up, but interest rate and inflation concerns are denting sentiment in Europe. And with geopolitical and interest rate concerns lingering, proceed with caution. And then recession fears and losses in the home builder shares since shares lower and the price lower in the UK. So lots of red lights there. So lots of reasons to be cautious, but optimistic and just getting our watch list ready to get back into good quality positions. And there's a lot of companies on sale. And we look at the emotional market cycle, and over here at the left, you can see again, buy-sell ratio, very low, 0.08 in Canada, 0.53 on the MTI. So when we're down in this area on the MTI, Dr. Toledo, our founder, and it was so great to hear from him yesterday at the masterclass, we are at this blast-off phase, and it's where rational investors confidently go bottom fishing. Want to have, an opportunity to take part in some explosive rallies off of this major bottom. All right, so we've gone through all these emotions, and here we are. If you haven't sold sort of your swing positions, your medium long-term positions, or taken protective measures, it's getting late in the day unless the stocks are really showing weakness in all the fundamentals, because we expect to bounce off of this anytime soon. All right, any other? I'm just looking for any questions, but I think we're all good. Mike says, with what strategy? Well, I'll go through a couple of strategies, Mike, but certainly the bottom fishing strategies, the searches, the jailbreak. There's an excellent bottom fishing search in the retirement folder. Basically, you're looking for stocks with a low RT that are still having some qualities of fundamentals available. So here is basically the strategy section, and I always recommend on these international forums that everyone reads the strategy section on the Friday, because you get a more detailed explanation of what VectorVest is suggesting or giving guidance to do. The market timing graph, I've got a 2-year daily graph because I did want to show this long trend. We actually had a confirmed up call way back here in November. That lasted a long time, but you'll notice with this support line, we've given back just about all of this last gain from this lengthy market rally. So in Canada, we have that 65-day moving average running through. Price is below that. Buy-sell ratio is below 1, and we're lower day over day, 2 consecutive weeks, 5-day periods. So we're in a confirmed down call. We are at the bottom of this channel. We are at a support level. And notice on Friday, one-day Derby winners were all bullish, mostly bottom fishing, type of stocks, and the same in the 5-day winners. So that's suggesting that we're getting close to this bottom. We'll see what happens from here. So I just wanted to show you, it's so easy to track industry rotation in VectorVest. We have a couple of ways to do it. Let me just pull up the Canadian market, and I'll move this over here. See if that shows up eventually. I'm just waiting to show up on my screen. There it is there. So from here, I can just go into Universe, and I'll show you what I created on the slide. And really, it's just looking at industry rotation out 1 to 4 weeks, but also 26 weeks ago. And so what I can see at a glance by putting these date time parameters in here and the parameter industry ranking, when you have industries or sectors under capital appreciation, that's where you'll find the RT ranking at the bottom. So that's all I've done there, and I'm just hitting the operator display only. So what I like about this setup is it shows up at the bottom 26 weeks ago here, 4 weeks ago, 3 weeks ago, 2 weeks ago, 1 week ago, and then the current RT ranking. So I can see at a glance, of course, that ETFs inverse, our contra ETFs, in other words, have been gaining strength all the way through here, moving all the way to the #1 ranked industry group. And so I can kind of see if there's any rotation going on. Let's just have a look. For example, here's retail apparel. The ranking was way back on 100 of our 122 industry groups 26 weeks ago, and then 4 weeks ago, 29th, 3 weeks ago, 15, 2, it got bumped up a little bit to 16, and then last week it was in 19th spot, and now it's in the top 10. So you get an idea of how you can use that. Here's software security. Right from the search, I can right-click, view the stocks in the industry group. There's not many in this particular group, but Absolute Software is right at the top of the list. It has 1.75 for an RT. It certainly lost ground for relative value and relative safety. But if I look at the graph and I can right-click and just look at the graph, and I can decide using the near perfect graph layout, the near perfect indicator, I can decide if this has some potential. And it tried to get above this most recent resistance here. It didn't make it, but the 5 moving average of RT has just crossed above the 40. And so I think this one has some pretty good potential. And I just went through and highlighted the top stocks in the top industry. So very quickly, you can create a watch list to look for opportunities going forward. And you can use the same process in any of our countries. Yeah, Mike says some of these stocks have very little volume. Yeah, you're probably right. Some of them will have. I think the Absolute Software will be fine. Let's just have a quick look. Volume is thank you for raising that, because volume is certainly something you want to. Oh, I'm back in the slides. I can't double click on the slides. Let me get my screen back here. Here we go. View stocks in the industry group. So VectorVest gives you all those metrics. And yeah, here's one that didn't trade at all on Friday. Average volume is 58,000 shares, but Absolute Software is trading on average over 100,000. So that's in Canada. That's pretty good. If it was the US, you certainly look for more. All right, so I'll just pull that off. So hopefully this is something that will help you. It's very easy to set up. If you have any difficulty setting up your search, there's the RT ranking. And again, the only time you can sort by RT ranking ascending is when you are returning right here, industries or sectors. So here we're returning industries, so I can sort by RT ranking. Okay. All right. I'll move on here a little bit. So these were some of the stocks, and so I just thought I would put it in here when you're going back to review the recording. You can have a look at some of these. I didn't see any that are really in a perfect setup at the moment, but these are all stocks that I think have some potential to break out and some long-term potential when they do so. Dollarama is probably one of the better looking ones right now. And then there's some inverse ETFs that are still right at the top of the industry viewer. HQD has been very strong. We've talked about it in our Tuesday Q&A. You know, a lot of us have been hedging with that, so some opportunities there. My essay on Friday, just yesterday, was when companies are on sale. And I just talk about 2 watch lists, you know, where you can look for stocks that are being recommended in various media outlets. WOW stands for watch list of watch lists. So these are analysts recommending these on TV. In Canada, we have the BNN channel and other print media as well. So these are 2 strong watch lists to have a look at. been some recent additions to that watch list, and very easy to access. You go to the Viewers tab. It's under Special Watch Lists, and they're down at the bottom. There's Wow Dividends, and you can come in and, for example, you can sort by any of these columns, but here's the dividend yield. So you've got some really strong dividend yields. And then come to Value and Growth. And my favorite sort here is just the forecasted earnings growth, if I get back here far enough. And so you can sort by forecasted earnings growth. And there's Allchem, for example, AKE. Interestingly, when we were visiting on holiday, our daughter in Boston, where she's doing research, Allchem was one of the major office complexes on the way to her office. So that was pretty interesting. All right, so that is the WOW watch list. Great source of trade opportunities. I like to take a look at the top 10 gainers, the global market ETFs. It's interesting that just over the last 10 days, there isn't one country in our global market list in the cherry picking folder in the US market. There isn't one that's making money. These are the countries that are performing the best: Brazil, Mexico, Japan, India, Singapore, Malaysia, Switzerland, and then finally the Dow, right close to the bottom. But market sectors, you can also get an idea of the sectors, and it's interesting that gold is starting to make a move. Gold, the GDX was the only one that showed up as positive. So again, these watch lists are under the cherry picking folder on the US side. Gives you an idea which sectors are moving up. Yeah, there's just a great comment from Michael Bryden saying cash is a position, but get your watch list ready. And he's absolutely right, as he often is. Most often, I should say. All right, so I wanted to give you that quick overview of what's happening in the global side of things with our color guards, and then specifically Canada, a little bit more detail. And from here, I'm going to turn it over to our friend, Dr. David Paul, Managing Director of VectorVest UK, for a US and UK market review. And you can watch a lot of David's videos on our VectorVest YouTube channel as well. So with that, David, if you want to take over the screen and begin, that would be awesome.
Thanks very much, Stan. Can you hear me all right there, sir?
Yes, I can hear you just fine.
Okay.
Loud and clear.
Well, can you see my screen now? As you know, I can. You
yes.
see the blue screen?
Yep, just starting up now. You're
Excellent.
all good.
Okay, all right. Well, good afternoon, everyone. It's 4:25 here, and it's great to see you all. First of all, I've got to put up the UK specific disclaimer. That pretty much says that although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a detailed fact find to ascertain your stomach for accepting risk. I'm allowed to talk about shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on, hopefully, to more interesting matters. Although, as Stan's review has shown, there's an awful lot of red around. So this is a bit of homespun philosophy, ladies and gentlemen. The markets are just the same as they were 10 years ago because they keep changing, just like they did then. We have a tremendous propensity to look back and say it was easy then, but it was just as difficult as it is now. The one thing that I would like you to take home from my little presentation is what my first desk head said to me in a pretty grotty trading floor once upon a time. And he was a very, very aggressive Scotsman, ex-Black Watch. And he used to say that when it's time to buy, you won't want to. Okay. You just won't emotionally want to do it. So just remember that. Similarly, when it's time to sell, you won't want to. So just think about that. Very useful statement. So if we have a look at the US market, folks, that's the front page that Stan's already shown you. And that's just a blow up of the same thing. And as you can see, the market fell apart in the last 10 or 15 minutes last night. We'll look at the S&P in a second, but it cratered through that 3600 level late in the day. Monday night's trading and Monday's trading will be very nervous below that 3,600 level. The buy-sell ratio is in a mega oversold. In fact, I will call it a mega oversold condition. And the MTI is in a mega oversold condition at 0.38. Very stretched to the downside. And all of the measures of the trend on VectorVest are down from the shortest term measure to the longest term measure. And the advice, folks, VectorVest does not advocate buying stocks at this time. As Stan says, as Michael Bryden says, there's a great deal of work, and I'll introduce you North American folk to a soccer expression. It's called running off the ball. There's a great deal of work to be done because in the next month or two, there's going to be money to be made. And you need to be in a position where you've worked out what horses you're going to back. I have three. I'm not at home at the moment, but I've got three trading books. Three books always on my desk. One is Mark Douglas's book, Trading in the Zone. The second is a book by a lady called Annie Juk, and she's the U.S. poker champion, plus a PhD in psychology. And she's got a wonderful book. It's called Thinking in Bets. It's called Making Good Decisions when you haven't got all the facts. And we don't have all the facts, but we'll have to make a decision soon, folks. Third book I've got, I think, is the most important of the lot. It's called Practicing the Power of Now by a little German fellow called Eckhart Tolle, which teaches you how to keep your mind in the moment. As end-of-day traders on VectorVest, certainly in VectorVest UK, we are end-of-day traders. Your moment is the daily bar, and at the moment, that daily bar is pointing south. As soon as it starts to turn, the VectorVest market timing signals will turn with it. And the first thing that'll happen is that we're going to get a primary wave up. We'll then get a green light. We'll then get a wee black star in the green light. That's the RT kicker. We'll then get the DEW saying buy. We'll then get the underlying trend saying buy, and then we'll finally get a confirmed buy. Sometimes they get their underwear in a muddle in between, but nevertheless, one of the things that you need to have in your trading plan, folks, is which market timing signal you're going to get in with. You could elect to get in with a few of them. Build a starter position with a green light and add to that position as it moves along. But that thinking needs to be done now, folks, off the ball, not by the seat of your pants when the market's moving up. Anyway, I don't want to get off my hobby horse, but at the moment, the reality is that the trend is down. Simple as that. And down with a bit of oomph, as I'll show you. There's the chart, folks. That's a weekly chart of the US composite from COVID. There's the COVID sell-off. There's the run-up. And as you can see, I've just put on my bog standard 8-week stochastic, which the UK people get hit with every Monday afternoon. It was taught to me by the founder of the guy who put the stochastic together, George Lane, way back in 1986. And I've had this up every Monday afternoon. This is a reverse divergence signal, not a normal divergence signal on the US market. And that was saying this market wanted to fall for the last couple of months now. So the stochastic is getting down into oversold area, but my experience of this stochastic goes back 40 years nearly. And when the stochastic gets down into this over a sold area. Before we get a meaningful bounce, it normally stays down there 2 to 3 weeks. So there could be quite a bit of pain to go here. As you saw, the rally that we saw on Wednesday was a one-day wonder. I'll show you that in a second. This is the more conventional VectorVest market timing. And as you can see, folks, these are the confirmed calls. And as you can see, prices are making a falling bottom. And the old MTI is also making a falling bottom. Little bit of divergence in there that's lasting a day or two, nothing worth. Similarly, the buy-sell ratio. So what's happening is that the prices are falling and the car is speeding up. Now, those of you that are new to momentum studies, momentum is nothing more than you and your motor car. If you're in your motor car and you've got the foot in the petrol and you're speeding up, there's a higher probability that you're going to keep going than if you've got your foot in the brake and you're slowing down. So momentum is increasing to the downside. Invariably, before this darn thing turns in a meaningful way, we're going to see a little bit of divergence, the price falling and the old MTI rising. And that would be called bullish normal divergence. I think we're way off that. Maybe it can happen quickly, but it's too early for your humble correspondent, apart from taking shorts. That is DEW, and those of you that are swing traders, the options course, if you've done the VectorVest options course, they use the DEW to ascertain market timing, and that darn thing now has been down for a month. There's a bit of a rally, as that's the one-day wonder that happened on Wednesday. Nice little long in there on Wednesday, and market is about to make that bottom. If you believe in the Elliott wave, then there's a fifth wave coming of this one little wave down here. We'll see what happens. And that's the primary wave, which has had a darn good run. I trade the S&P 500 for a living, folks, and if my trades are in sync with the primary wave, they invariably go well. I've only taken one trade against the primary wave. This is this little fella here, and as they say, every now and then the blind pig will discover the corn. It went okay, but more luck than judgment. So here we are at the S&P 500. Your humble correspondent knows every nook and cranny in this particular instrument, this is the run-up since COVID, folks. And ladies and gentlemen, we are not even at a 50% retracement here. So although you may think you're going through hell, this is still a bullish chart. Okay, it hasn't even got to the 62. Now, my best shot at this is that we've got a 62% retracement here. Sorry, a 50% retracement there. And we've also got a fib expansion of this last little rally. I think we're going down till about 3.2 here. We could stop here at 390, but I wouldn't be at all surprised to see a push down to 3.200. So again, the daily stochastic is down in the oversold condition, but we knew that anyway from the MTI and the buy-sell ratio. So I think Monday's going to be a nervous day. But we're nearly at the end of this, as Stan says, but could be 2 to 3 weeks away. And that was the one-day wonder rally. This seems to be falling. That seems to be rising. But the only reality, and I think you'll find practicing the power of now an exceptionally good read. If you can keep your mind focused on what's happening now, not on the last bar, not on the next bar, but what's happening now, you'll find your trading rules much, much easier to follow. That was the S&P yesterday. And again, those people from the UK that have followed my trading method, that's what you call a Wyckoff upthrust. And this breakdown in the last, this is a 5-minute chart, in the last 10 minutes, that surprised the hell out of me. But that was a really nice trade there. I have a goal of 200 S&P points at the moment a month, and it took me until yesterday to make that goal. And in fact, I cut this trade shorter than I should have when I hit the 200 points. So that's what I do. That's how I keep myself off the streets. So this is the UK market. Stan's had this all in. There's not a great deal of difference here. We have a down situation. I've got it blown up here. Buy-sell ratio is on its knees at 0.12. The MTI not quite as low, but certainly in the oversold area. Short-term trend is down. Underlying trend is down. We've got a confirmed down. VectorVest does not advocate buying stocks at this time. Takes a great deal of focus to keep your mind in the present moment. Not on the last one, not on the next one. And if you're a short-term trader on a 5-minute chart, your present moment changes every 5 minutes. And that's why there's so very, very, very few people who can trade successfully intraday. I normally myself trade an hourly chart. In fact, I tell the UK people quite honestly that when I trade a 5-minute chart, it's because I'm bored and I'm looking for something to do. But changing your perception of this moment every 5 minutes is really, really, really difficult. We had a young man at our, my best friend, in fact, at our latest Streetwise Investor Club called Tom Hogarth, who does that exceptionally well. He spoke to our group, I think it was last Wednesday night, the Wednesday night before. So that is the weekly chart. And again, we haven't even got back to 50% of this pullback. We've taken out the COVID high. I was hoping that COVID high, only taken it out by a week. And as you can see, the market is running down that previous trend line, making a double bottom here. The weekly stochastic is oversold. I pay a great deal of store by a simple 8-week stochastic. It stood me in very good stead for a very, very long time. Again, prices are falling. Indicators are falling. Exactly the same story. So unfortunately, we can easily get a 3 to 5 day bounce here, but there's probably more pain here. I hope not, folks. We're near the end of it, and I think it's too late to short the market. Far, far too late to short the market, but still too early to buy in. And that's the DEW, and DEW's got to do quite a bit of work for me to get back in here again. And that's the primary wave. Primary wave has worked exceptionally well on both sides of the pond over the last 6 or 7 months. And really that's because the market's been trending so strongly. So what's driving certainly commodity markets? Well, it's the dollar. There's the dollar against the Canadian dollar, Australian dollar, held up well. There's the euro and the British pound. British pounds, as you all know, taking a bit of hammering. Now that chart is a little bit out of date because the pound has actually moved back up yesterday and sitting pretty much the same place as the euro. So a great deal of what you read in the newspaper about the British problem, the UK problem, in fact, is a dollar problem. And there's the old Japanese yen, which has underperformed totally. And as you know, the Japanese had to in fact, interfere in the market Friday before last, or was it 2 Fridays ago? All I know about these exponential moves, this is based on looking at them for 40 years, is that they can go on much, much further than anybody anticipates, but they rarely correct going sideways. When they do correct, they go pull back very strongly indeed. And Stan, I think that the gold market anticipates that. I'm going to look at gold in a moment, but for gold and those gold shares that you in fact spoke about, for those to really motor, that dollar needs to give up a bit of ground. And that's driving the oil market and it's driving the commodity market. So let's see. So that's a monthly chart of gold, folks. Again, the UK people are subjected to this every Monday afternoon. God bless them. This is a monthly chart. My old stochastic is right down in the buy area. Can it go to here to 1400? Of course it can. It can do it at once. I had a friend of mine implored me to teach his youngster how to trade the S&P a couple of weeks ago, and he sat with me for 2 days. I don't do it anymore, but I owed the chap's father a favor, and he said to me, "How did you know it would stop there?" And I said to him, "Well, I didn't. I was just hoping it would stop there." It is my philosophy that I buy at the point of maximum pessimism, because there I can risk £1 to make £10. It takes a great deal of testicular fortitude to do that. But it's the only way that I've been able to be consistently successful in the market, is to find, in the stock market, find a share with great fundamentals, great growth fundamentals, and then buy the damn thing at support. And markets have pulled back to exceptionally good levels in this last little run. And there's going to be exceptional opportunities ahead for those people that can run off the ball. Okay, and that's the job for the next 3 weeks, in my humble opinion. I'll certainly talk about the UK, and I'm sure all the managing directors will talk about their specific markets. Very excited about gold at this level. Not because I know what's going to happen next, for sure. If I knew it was going to happen next, I would mortgage up the house and put everything on it. But I don't know what's going to happen next. That's why I risk 1% of my loot on every one trade, trying to risk £1 to make £7 or £8. There's the weekly chart, folks. Again, the weekly chart's showing a compound divergence down here. It hasn't been confirmed. And I would like to see it trade a weekly close above this line. That will be a Wyckoff spring, the mirror image of an upthrust. And Wyckoff put this all together in 1935. Before you go out and order Wyckoff's course, don't think it's something you're going to understand on a Sunday afternoon while you're drinking 3 or 4 cold ones. It's a big piece of work. I've just taken the spring and the upthrust out of it that work for me. But I'm very excited about gold. There's the daily chart. The daily chart has come down here in 3 waves. It's still making falling tops. It would need to make a rising bottom for me. The safest place to buy is after the first rising bottom, and the safest place to sell is after the first falling top. W.D. Gann, 1923, How to Make Money in Commodities. So I'm really excited about gold. There's the GDX, Stan, that you mentioned. And the GDX has pulled back. Again, the UK people are rolling their eyes to a 78% retracement. I'm sure Susan in the background, who's a trained economist and a CFA chartered holder, thinks that I'm sort of reading the tea leaves by harmonic patterns. But that pattern from the COVID crisis, that pattern made famous by a fellow called Harold McKinley Gartley. And he wrote a book in 1935, How to Make Money in Commodities. As you can see, this is pulled back in 3 waves, and it stopped to the tick on the 78% retracement. Do I know that level is going to hold? Of course I don't. If I knew it was going to hold, I would put every cent I've got, Stan, on gold, but I don't know that. How to make decisions when you haven't got all the facts. That's why Annie Duke's book is on my desk. A great read. I can't recommend it strongly enough. Annie Duke, US poker playing champion, plus a PhD in psychology. That looks good to me. It really looks good to me. From a risk to reward basis, here's oil. And oil, one of our subscribers in New York City who sits through the UK Q&As tells me that the UK Strategic Reserve have got bids to buy under 80. This is another Gartley. It's not as good as the one, but this market looks mature to me. The stochastic's in the right place for a buy, but it needs to get above this trend line again for me. If this level fails, and this is the last level, the 62% level held for a month, then went right down, and it's now at the 78% level. It's gone through that trend line and much lower here, and oil can certainly get to 60. Now, don't stress out there, folks, because most of the oil companies that you've got your money in can still make really, really good money at $60 a barrel. But it'll take the shine out of them. But if this level were to go substantially, we could actually get down to $40 a barrel here. That's the technical target from this. But I'm pretty sure we're going to get a rally here first. Too early yet, and it will be a function of the dollar. If the dollar, in fact, corrects, sooner or later, that dollar is going to correct. And when it does correct, it is the noisiest trade in town, very crowded, that long dollar. As soon as that starts to turn, then those hedge funds are going to run out of that big time, and it will correct very fast indeed. That will push oil and gold up, and I think we could have a good Christmas out of that. That's the daily on oil, and as you can see, the darn thing is still making a series of falling tops. I've probably gone on far too far. I think there's more pain on the downside in the stock markets, folks, on both sides of the Atlantic and probably everywhere in the world. Monday's going to be a very, very nervous day. However, I think that on good quality stocks that are undervalued, stocks that are growing their earnings strongly and safely, there's going to be a great deal of bargains ahead. In the UK, I'm sitting at about 16% invested. The rest is in cash. Every Monday afternoon, I do my best to point out shares that are sitting at good levels, and I shall certainly do that on Monday afternoon coming. Anybody that's in the Manchester area in the northwest, I'll be up in Manchester next Tuesday night. And if you want to come along and say hello, just give me a shout. david.paul@vectorvest.com. Anybody that wants to join the UK Q&A on Monday afternoon, 1:30. It's early in America time. You won't even have your cornflakes at that stage, Stan. Give me a shout as well, and I'll get you an invite. I hope I didn't go on too long, Susan, and cut into your time. Thanks very much.
Hey, David, that's wonderful. Thank you so much for a great presentation again as well. Not sure if your sound just went off, David, but
no, I can
anyway.
hear you.
Oh, you can hear me. Okay.
I can hear you perfectly, Stan.
I appreciate the offer of the cornflakes, but I'm kind of a cinnamon toast crunch guy now. So that's become my favorite cereal. But anyway, excellent presentation and lots of caution in there, everyone, but just a lot of guidance to get ready, have your watch list ready or your methodology, how you're going to search for the stocks that meet the criteria that you're looking for, and an invite to David. You can always go to the views on the UK and register for his Monday webinars, and then there's the postings on YouTube as well. So lots of great information there. Thank you so much. There was only one question that you might have an answer to, but it's asking a lot right off the top, because someone asked David asked if there's a good ETF to short the pound. And so if you have a quick answer on that, David, if there's one that you're aware of.
There is one in the American market, but I can't recall it, Stan. I short the pound. I short the pound in the UK on a spread bet, but I haven't shorted. I've in fact, apart from long-term bets, I'm focusing I'm getting old, Stan. I'm focusing just on trading the S&P 500. When I've worked out for sure whether the S&P 500 is going to go up or down on Monday afternoon, when I finally cracked that, I might look at the pound against the dollar. The pound against the dollar is called cable. and it's a very nasty animal. It's got a temper on it like my ex-wife. So just be very careful before you tackle the pound against the dollar. It's a very nasty animal.
That's good advice, and also, David, you can use the Google machine and probably find a candidate if you're determined to find an ETF. All right. Well, listen, thank you, David. I appreciate it. It's awesome. I'm going to ask Susan Hayes-Culleton, the Managing Director of VectorVest Europe, to take over the screen. She's going to be presenting on 5 ways to measure stock performance. And you probably have seen her videos, the Fantastic Female Fridays, just a terrific series. So Susan, welcome in if you want to take over the screen, and look forward to your presentation.
Okay, I'm just going to check in there now. Can everybody hear me okay?
Sounds good now.
Great, perfect indeed. I was indeed muted there beforehand, as I was having all sorts of reactions here to what I've been hearing, much of which I agree with, I have to say, and I'm hopefully going to be able to give you a way in which that you can handle the market conditions without exorbitant levels of testicular fortitude that somebody might need along the way. So, first of all, everybody, it's really, as I say, it's wonderful to be back with you. My name is Susan Hayes-Culleton, and you may have met me before if you attend any of the ESG and Tech show, of Fantastic Female Fridays, or any indeed of the global summits that we've been having around the world, or, of course, if you are also joining us from anywhere in Europe where we too deliver our weekly sessions. They happen on a Sunday night. And that is when I deliver them, they're in English, and when other people in the business, namely Tom van Nooyen, for example, in Belgium, delivers them, they're in Dutch. But of course, my views are always out each week as well. And it was actually based on, a couple of weeks ago, I wrote one of my views about different ways to measure stock performance that Stan reached out to me. And from there, I really wanted to do a deep dive into this area, and to look at 5 ways that we can measure stock performance, because I think we often jump straight into looking at perhaps return on investment. And I think that means different things to different people. So what I'm going to do today is give you 5 ways. One of them is the obvious one, but another 4 ways to measure stock performance. And I'm going to take you on a journey of perhaps introspection and the history of the markets, and ways that hopefully you might learn something out of this along the way. But before we get to that, I just want to quote you back. This is an extract from a diary that actually Benjamin Franklin used to write. It's from his biography, and he, as you can see here, in between 6 p.m. and 8 p.m, Benjamin Franklin every day said that it's important to put things in their places: supper, music or diversion, or conversation, and then an examination of the day. And the reason that Benjamin Franklin did this is that every morning he began his day by asking, what good do I need to do today? And then in the evening, he would ask, well, what good did I do today? But he also talked about the importance of really and truly thinking through what you have done, but also putting it into its rightful place at the end. And it's on that very note that I want to do the same with you, is that I think that it's important to think about, what decisions did I make, or what effort did I invest? As David said there, what risk did I put into my position? We heard there, for example, that at some stages, David wants to risk £1 to see if he can make £7 or £8. And he talks about the time at which you can make the most money is obviously at the time when it may be that you're taking the most risk, but that could be a perception. So I think it's very much worthwhile putting things into their places, as Benjamin Franklin said, when it comes to an end of a trading period. Maybe that could be the end of a calendar year, could be the end of a trading day, or it could be just at a period of time that offers good opportunity for reflection, which of course today is that time. So before I go further, can I ask you this question? How do you measure stock performance? So what's important to you? And I have the comments right up here beside me. I can take a look over here, and I'm just going to see how do you measure performance? Is it simply, do you look at how one stock has changed in price, Do you look at your income return, for example? Do you look at after-tax return? Is return what you look at all? Do you look at your portfolio? So I'd just like to see here, as I say, I have the comments up here in front of me. If you're live and you're watching this right now, I'll see it in the chat. If you're watching this on the recorded basis afterwards, then we'll see it in the comments. So just going to take a look over here. So Terry says enterprise value versus market cap. Okay, cash, debt, VectorVest ratings. Okay, you said income daily. Interesting. Scott says not using relative performance. Interesting. Marty says return on investment. Wayne says risk versus reward. And I have a play on that I'm going to put to you as well there, Wayne. Kobe says by earnings. Okay, and Tony says or return on investment and growth. So Tony, am I right in thinking there you look at the growth in terms of capital gain as distinct to total return, which would include income, for example? I see Fred here says following the EMA, so exponential moving average. Stock time says income and capital gain. Herbert says earnings. Interesting. Davis says weekly look at your account. Benjamin Franklin, follower in that case. Ron says cash flow, and that's a very interesting one as well. Okay. Return, monthly performance, growth, bank account. Yes, Jack, you see that's the other thing, is that's another way we could look at it, is on an overall basis, have I more money in my trading or bank account now versus a comparison period. Return on exchange rate, well done, Gerda. I'm going to be mentioning that in the fifth way today. You said return on equity, okay. Also, if I'm beating the ESPX. Now, I think that's an interesting point as well. You know what very, very few have told me, very, very, very few have said so far, is your comparison to the market. And that's what I think is intriguing, is that a lot of the time we think we are trying to outperform the market, whereas in reality, what we're doing is exactly what you're saying. You're comparing yourself to zero. And I often put forward this idea, if the market was delivering minus 10%, but my account delivered minus 5%, I would have outperformed the market. Would I be happy? No. So, well, that's me speaking personally. If I was an institutional fund manager, I might be different. If I was a trader, of which I'm not, I'm an option seller, I'm a longer term investor, I'm somebody that values the fact that my account would rise in value in comparison to a previous time. That is what I look for. Okay, so and there's lots more here that's coming in, but you see here as a result of me asking this question that actually people have different views on this. They do have different views for sure on this, and that's where I wanted to bring to bring what Stan invited me to kindly do to the table. Now, one thing that David started off with saying that the markets are the same today as they were 10 years ago, always changing. And, you know, I had planned to talk about this before he said that, but I'm going to give you an alternative view that actually reinforces what he says all the more. For one of my Fantastic Female Fridays episodes this calendar year, I invited a physicist, an Irish physicist based in New Zealand, to come on the show. And you might say, well, what has physics got to do with the financial markets? Little did I know it, but actually physics created the created the motivation for the financial markets. Where the stock market actually began, the motivation for it actually began, was when there were really big railroad projects going to be started in the US. And as a result of this, people then said, I can't afford to bring all this risk on me as an individual or my small business, where pre-industrial revolution, I could have done this. So as a result, now, of course, you might be saying, well, look, the stock markets began long before that. I get that. I'm talking about big capital markets. Is that then, as a result of these types of really big initiatives and really big projects that required really big money for heavy infrastructure, then business people said, okay, we need to raise big money from other people. And the other thing is that if this goes wrong, I as an individual or I as a business can't handle the consequences on a knockout basis. So as a result, I need to broaden this out. So as a result, if we go to the turn of the last century, in 1900, this actually was what the markets looked like. I'm just going to start off up here. Now I'm going to scroll right in there onto my screen so you can see. In 1900s US, the rail industry actually absolutely dominated the stock market, and also in the UK. Now, the UK stock market was actually a lot bigger than the US market at the time. Let me just, I want to come over here to the left-hand side and see if I can if I can scroll in there, and it looks like I can't. So I'm going to go over here to Plan B, and I'm going to show you, because I tweeted these out during the week, and let me just show you exactly what that picture says then on a wider basis. Down here we go. As you can see, I tweet quite a bit. Okay, now here was what I wanted to show you. Is up here you can see that the rail industry in the 1900s was, as you can see, took over most of the, or took up the lion's share of the stock market in the US, and to a lesser extent in the UK. Down here you can see in 2015 it was much more broad-based. In fact, even though rail represented 80%, or if I'm right, I just want to be correcting this value. Yeah, of the US firms listed in 1900, more than 80% of their value was in industries that are today small or extinct, and the UK figure is 65%. So the thing is that we are in a time of constant change, and as David says, it's not just the same as it was 10 years ago, it's the same as it was 100 years ago. And also what I wanted, the other picture that I wanted to show you is this one, is that back then the UK actually accounted for 1 in 4 pounds, I'll say, 1 in 4 pounds, 1 in 4 dollars, 1 in 4 of any unit of measure was actually, the size of the stock market back then was in the UK. The US was actually only 15% back in 1900, whereas in January 2016, this year, on this particular year, of course, which was going to be a really big year for all sorts of political, economic and social reasons, the US then accounted for actually 1 in 2 and slightly more. And part of that was driven by the massive growth in venture capital and earnings that was happening in an economy that's grown significantly throughout that period of time. But it's not just those two countries that I find interesting, is that if you also look at this, look at the big ones. Look at Germany and France, there were 11%, 13%. Belgium was 3.5% of the world stock market at the time. And I'm somebody that spends a lot of time digitally and physically in Belgium, because it's one of our biggest markets in VectorVest Europe. Down here, when you look, Germany was down to 3%. Belgium isn't even seen. Austria as well was another country that had quite a very significant representation at the time. So the thing is that we are indeed in an environment where things are constantly changing, and it's on the slide, so you don't have to go looking for each of those graphics. I got those from the Financial Market History book from CFA Institute, and I just thought this might actually frame our conversation today to actually see exactly where things have, how things have evolved when we talk about performance. So, number one, when it comes to the first method that I believe that is worthwhile considering when it comes to stock performance is, what is your ability to execute? Now, about 3 weeks ago, I worked with the team in the Successful Investing Coaching Group. So I was in with Brian D'Amico and I was in with Todd Schaefer. And one of the top reasons why people want to be here at VectorVest is because they want to be able to understand how to follow rules. And of course, these aren't just any rules. These are rules that have been proven to exist. The question is, and that I'm asking you to consider today, is what is your ability to execute? Now, the picture that I have here may be a little bit difficult to see, and the only reason that I have this here is so that I could refer back to it in the event that anything happened to the program, which of course hasn't happened today. So what I'm going to do is that I'm going to bring you over to a graph, and I'm going to ask you, what would you have done right here? The graph that I'm going to bring you to is Salesforce. So I'm going to open up over here, and I'm going to pop in here to my graph, and I'm going to bring you in here to Salesforce. Okay, so this is the graph. I'm going to just close here. And what I would just like to ask you is, in the chat, please do tell me what you would have done round about here, right? Just round about here. I'm going to say, you can pop, if you want to open the program yourself and take a look. So what I'm asking you here is in December, okay, I'm going to say December up to the beginning of February in Salesforce, okay? What would you have done round about here? What would you have done? I'd just like to hear in the chat. Let's say you have the stock, so you have Salesforce. What would you have done? Would you have bought more? Would you have done nothing? Would you have sold? Would you have shorted? Would you have sold and shorted? What would you have done? Let's just, I'm just going to take a look over here now again. Let's just take a look and see. Because, okay, so Robert says sold. Steve said that is, were options of, okay, knowing about your risk. Okay, sell. A lot of you say, Gary said sell, Herbert said sell, Marty said sell, Frank said hold, Edward said hold. Abel says, I don't know. Interesting. Okay. Again, I'm going to go back to a quote here that David said, is that, and according to his Aggressive Scotsman When it's time to buy, you won't want to. When it's time to sell, you won't want to. So let's just think about here. An awful lot of you are saying, okay, sold, put on a covered call, done nothing, sell, 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 sell. I would look at the RV loss percentage, made a decision. You said sold a long time ago, etc. Okay, all right. Now, what you would have done is, of course, up to you. But the question that I have to ask you, that I'm really putting front and center to you, is based on a decision that you can make in the cold light of day, or again, as David said, not at the seat of your pants, then how good or how well can you execute upon a decision when the moment comes? Because when I worked with people in the Successful Investing Coaching Group, a lot of people said, I'd love to know when to sell. I'd love to know how to know when to sell. And the answer is that VectorVest makes it very clear, is that you sell, as an example, one really clear rule is sell when you get a sell recommendation. And the reason that you sell is nothing to do with art. It's entirely to do with science. And that is, let me just put on my stop here. Over here is that, quite simply, I'm going to put it on again. I'm going to put it on again. Okay. There we go. There we go. Is that you can see here, if I was to scroll right in on the 1st of December, the price that day went below the stop price. Simples. So as a result, a sell recommendation was issued. Now you might say, okay, well, look, the next day it turned into a hold. Okay, fair enough. But then after that, then another sell recommendation was issued here. You may say, well, okay, yeah, but Susan, like it went back to a hold. Fair enough. Then it went to a sell recommendation again here, and it stayed sell, 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 sell all the way down. You know what would have made this really difficult, though? You know what would have made this super difficult is if you looked at the earnings graph. If you look at the earnings graph down here, and let me do that, but I'm going to just thicken up the line because I just want to make it as really thick there for you to see. Look at the earnings graph. It's beautiful. It moves from the bottom left up to the top right. So as a result of that, you can see that in this particular scenario, you really and truly would have been able to make a very clear decision from a sell recommendation point of view. But on the other hand, from the bottom left up to the top right here, we've got our earnings per share. And that has been rising. And let me even intensify this even further again. Let me go one more time. And that is that I looked at what was going on here at this period of time. And over the past 3 years in Salesforce, revenue doubled. Revenue doubled during that time frame. And it talks about, if you look at the earnings report, it talks about huge, huge, huge results that it's had along the way. So the point I'm making here to you is that you're in a situation where you can see earnings are rising. You can see the revenue is doubling. You can see there is a lot of business reason why Salesforce is growing. The thing is, could you have executed? So my point is now, let me go back and give you a way in which to deal with this. Okay, I'm just going to talk to you about knowing when to sell. There's lots of VectorVest signals depending on the type of trader or investor that you are. In one case here, you can see that we have, for example, a sell recommendation occurs when the price falls below a stop loss. It is super simple to identify when that happens. There's lots of others in there, whether it is a percentage fall in price, whether it is a price falling below a moving average, or I'm sure that you all have various different ones. However, my question to you is, if you find it difficult to execute, then ask yourself these questions. 3 questions that I would put to you. Number 1 is, I remember one time I was dithering on making a decision, and my husband said to me, who often makes an appearance in my commentary, he said, how much will it cost? How much will it cost you to sell? He said, when I was dithering on selling something, and I said, yeah, but then I'm going to lock in a loss. And he said, hang on a second. At the time, it was $15.95 was what we were paying for a transaction at the time. He said, that's how much it costs. You can always buy it back. And that changed my mindset, because I said, he's right. He said, if I really did feel that the stock was going to turn around and go back up again, well, then I could just spend another $15.95 doing that. The second thing, the other question I would put to you is, would you proactively buy this stock now as distinct to others? And that then, you know, when you look at it like that, when you think, am I holding on to a stock because I don't want to see it fall in price anymore? Or I just don't want to, I just do not want to kind of feel that sense of failure because I'm after locking in a loss. Then another way of looking at that is, would you, if you had $1,000 right now, $10,000, $100,000 right now, if you had the amount of money that was in that stock today, if that was sitting in cash in your account, would you buy the stock today? So that you are actually at that position. Because if you say no, remember, you're actively turning down the opportunity to put that money into something else. And the third thing is, if not now, when will my signal be? Because VectorVest has no like, no, but really sell now recommendation. There is a sell recommendation, which is when a price falls below a stop, and that's it. There is no other one. Hold, of course, as you know, is when we're not into a buy anymore, but we're also not into a sell. So if you're not going to follow whatever rule you have decided to follow, if you're not going to execute upon that, then what? Then what will your signal be? So on that note, I'm now that was my first question that I wanted to put to you. And what I'm going to do now is that I'm going to move on, and I'm going to pop onto my second method. Just before I do that, just going to go back to you there, Stan. Any questions at this stage, or will I keep going?
Hi, Susan. I think you can keep going. Your questions, I think the questions are being answered. Just really like the questions you put up on the slide. Very
Perfect.
insightful, very insightful. How much will it cost me to sell? We don't think about that as much as we should. So that was great. Thank you.
Okay, perfect. Perfect indeed. So, and right, what I'm going to do is I'm going to move on here and look at our next question. So, and I'm really actually delighted here that there's loads of people coming in here with their rules, and I think that's a really good thing to do at this point, is share what your rules are, particularly when it comes to knowing when to sell, because that right now is top of mind with so many people, and because we're in a really bearish environment, it is top of mind at the moment. So now what I'm going to do next is that I'm now going to move on here. I'm going to move on here now, and I am going to go on to my second question, and that is, what is the reason that I'm buying a share? So again, at this stage, what can I just ask everybody to consider? What is your decision rationale? Okay, or sorry, yeah, for why you're buying. Why do you buy shares? So let's just hear it through the chat. And again here, anticipation of price rising. Okay, but what is the reason? What would underpin that to garner price? So what is the reason? Like, why would you pick a share? Why would you pick a share? So for example, one of my top reasons is because of a high VST. Okay, anticipated upward movement, VectorVest recommendation in the search, fundamentals are good. Expand monthly income, positive momentum. Okay. Stock has good perspectives, good, right, okay. I'm getting there, getting a good sense there of what people are picking. Right, what I'm going to do now is that I am going to show you a tool that I use all the time. It's the note-taking function on VectorVest, so that then you can actually lock it in. You can lock it in as you go, right? So let me just, so what I want to do here is that I want to put this to you, is that do you note down why you're picking a share, or why you're buying a share when you buy it? And the reason that I put this to you is that I always think of Kevin Crowe. Kevin used to work with us here in VectorVest, and he always talked about the importance of keeping a trading journal. And he spoke about, and it's a very good practice, is to write down why you're buying what you're buying, so that then when it comes to selling it or adding to it or keeping it, then after time, then you ask yourself, is the reason I bought still there? So what I just want to do is that I just wanted to show you a quick tool here to show you how to do this. Okay, so I am going to pop on over here to the program. I'm actually going to go to Europe now. Okay, so Europe is, of course, I always call it my own database. Of course, it's not my database. I'm not the person responsible for this, but all the same, I'm not responsible for putting it together, but I certainly do talk about it an awful lot. So I just want to show you a very quick function in here that just shows you how I keep a trading diary. Okay, so what I do here is that you can see here, usually it's under lines, right? Vertical lines, horizontal lines, etc. What I do here is that I'm just going to put in note, and then I'm just going to put in a note there wherever I am. And what I do then is that I write down in here on my note why it is that I'm buying something. So let's say, now this is a stock that I bought years and years ago, CRH. It's an Irish company. I bought it back in 2008 3 times. I bought it at At the time I bought it 17 euros a share, 15 euros a share, and the last time I bought it was at 11.95, and I said I'm not going any lower. I'm not going any lower. I was trying to average in, really felt that the fundamentals of the company were working out super well, and I said no, I really want to buy this, and I'm sticking with it. So let's say that, and by the way, the reason was, look, the PE ratio back then was just on the floor. I'm just going to take this off now, take this note off here now. Okay. So if I go back here, I'm going to back over here now. I'm just going to, right. So my PE ratio back at the beginning here, just going to now take that and now go back here to the share price. My P ratio was 5.7 for a company like CRH, and I just said, okay, that's the reason that I'm buying. And then I made an agreement with myself that I would sell if CRH's PE ratio went above 40, because I could see that the average around about that time was 20 historically, and that's never happened. By the way, I still have CRH. So as a result, you can see here is that I knew why I bought it, and then when it came to testing times, like here you can see the PE ratio was well up. It was up there at 34. The PE ratio up here was up here at, I think that was 38. It didn't go up to 40 anyway. But I just find by actually using the note-taking app here, it can be a really helpful tool to be able to document and lock in why you buy what you buy. And the other thing is that I also think when you're making decisions based on, I'm going to pick up on David's area here in technical analysis, it can be very helpful indeed to go back and look at the rationale for why you made a decision based on the lines that you were drawing at the time. Like in this case, I can't draw necessarily, well, I can draw a line, let's say, for a PE ratio, but if I was to go back and actually draw a line, it wouldn't tell me a story. When it comes to fundamentals, personally, I think using the note app, the note functionality here is very helpful. But I just want to show you how I decided not to do something in, just going to pop on over here to my US screen, and I would like to go, that's still Europe. Going to pop on over there to my US screen. That is still Europe. Okay, and here we are, yeah, SLV. Right, so what I'm going to do here is that I'm going to zoom in on, yeah, just right here, right? I'm just going to zoom right in. Over here, you can see here now, I hope that you can see anyway. I have the actual YouTube live running over here on my other screen so that I can make sure and keep an eye on what you're telling me and how things are looking to make sure everything is all good. But I had short put options in silver, right? And they were doing phenomenally well. Like let me just go back there and show you what it was like at the time. Look at that. I mean, it was just beautiful, absolutely beautiful. I had shorted options here, and they, like, I mean, you know, okay, I will say they were beautiful, but it was the time that I learned what going parabolic means and how scary that can be, right? So as you can see here, it's going up and up and up and up and up and up and up, and then it just fell like a stone, right? So anyway, I dealt with that at the time, right? I had been in a very healthy position at this stage until this happened. But of course, for anybody that sells options, sells put options, as you'll know, because I spoke before on this forum all about how I do this, the volatility at this stage had gone massively up. So the premia that was on SLV was really healthy. So I was getting really juicy premia. There was a lot of volatility, and of course, with a lot of volatility, and when I incorporated time value as well, like the premia were amazing. But there was one problem. I was selling puts. The stock was falling. That's not good. And it's not good for two reasons. One is, of course, that it changed the value of the option. But secondly, if I was to actually go on and take on SLV, I was dealing with a really falling stock, which wasn't good and healthy at all. But let me just scroll in now, and I just want to show you how I decided, okay, am I really going to get stuck into this? Am I, or am I going to do something different? So again, sorry, I just want to scroll right in here. Okay, here we are, roundabout now. So you can see the stock was falling and falling and falling and falling. But the thing is that so what I'm going to do is, here's where I am now at this stage, right? So mentally, I'm thinking we're in a hold or we're in a sell scenario. This is not an opportunity to be like selling puts. And I said, right, it's time to stop selling puts, despite the fact that I was selling a good bit of time value and despite the fact that I had really high volatility. I said, one way or the other, this is not going to work out for me if this keeps going. And I was just about to pull the plug. And I mean, I would have been quite in the red now at this stage because of the way in which silver had been going, right? Even of the newly issued ones, long after the parabolic had gone down. And this one graph stopped me from doing that. This one thing, because I looked at it and I said, hold on a second, I'm looking at the price of silver falling. However, on the other hand, I can see the RT was rising. In other words, I could see there was a divergence. So actually, buyers were beginning to push up against the sellers. It just didn't really look like that on the share price when I looked at it on an overall basis. So I decided to hold off. And I said, you know what, I'm actually not going to do anything. What I'm going to do now here is I'm going to let time pass. The volatility I'm going to let play out. And I'm just going to wait and see for another little while. Will this divergence, will it actually help me out? And if I move on forward then, over that period of time, you will see what happened. Look what happened. And from then on, as you can see, time did indeed pass. Volatility did indeed keep maintained, but that's because the price went up. Then I saw that we had the buy recommendation was back again. Now at this stage, I was beginning, I closed off a lot of my SLV at this stage because I had gotten an awful lot of the value out of it. And I said, okay, right, let's now get out of town for a while. But I would absolutely say it was by using my methodology for how to actually make decisions when, you know, the cookie was crumbling or whatever metaphor you want to use. That was key. So what I want to say to you here is that how do you note down why you're picking stocks or why you're making decisions, whether that's sell decisions or buy decisions. So again, I just like to hear this. Just like to hear this here in the chat. What is it that you do in order to document? Sorry, first question. Do you document? Do you document when you buy? Do you document when you sell? Why you're doing it? As Kevin Crowe recommended to me back, I remember I started doing that in 2014. I was watching him in action one day and I said, that's actually a really good idea. And lots of times when it has come to the crunch, I have gone back and I've said, is the reason that I bought still there? That is going to be the thing that I'm going to determine as regards when it comes to selling. So when it comes to CRH, I'm buying because of the PE ratio being at the time was super low. It has continued to be within a range that I'm totally happy with, given that stock's history. When it came to SLV, and I was actually looking at it from the point of view of, is there any sort of bullish activity here? And I used that sole 2 lines to make that decision. And as you can see, I was right. Now, things have, of course, changed after that, but I was right at the time. And I'm so grateful that I had the RT and that I had the graph and that I had the ability to make that decision accordingly. So just going to have a look over here. Okay. So Vicky says, I definitely do make a note when I'm buying this or why I'm buying a stock. Great stuff. Glad to hear that. I use another platform, Terry says. And of course, maybe it's like a physical paper notebook. Maybe that's what it is. Maybe it's a, you know, a Word document. Maybe that's what it is. But I notes document, but don't say why, Tony says. Tony, can I suggest you start? Because that is a way in which to really measure stock performance is the reason that I bought still there? And if it's not, then we're back into knowing when to sell. Okay. Okay, right. So that is my second alternative method that I wanted to put to you. And rather than go back to Stan again there and ask him if there's any questions, Stan, I'll just keep going. And of course, there will be time afterwards for me to be able to take care of anything that's outstanding. By the way, they were also the 2 longest. I'm now going to be moving on to shorter ones. Number 3. David spoke about risk-reward ratios, and a lot of us talk about that in the market. He mentioned I'm a CFA charter holder. We talk about that all the time, and there's so many metrics to do it. I could look at the Sharpe ratio. I could look at the one that has just sprung out of my mind, and it's Sortino ratio. I could look at so many ratios. I could look at max drawdown. I could look at a million things. But what I want to ask you is a different question. I want to ask you if you what is your results effort ratio? So what results are you looking for and what effort are you putting in accordingly? Now, again, if I do pop back over, I'm going to go back to our successful investing coaching group again. And there, Brian D'Amico asks a very good question at the beginning of every show, a bit like Benjamin Franklin did. And that is, what is a win? What win have you had? Now, I've changed the word win to result. And what I noted down, I looked at all the wins people shared with us, and I noted down that actually these 6 pretty much typify what VectorVest subscribers deem in that group to be a win, a return, but particularly a return in a period of time. If I said to you I made 20% in a stock, you might say, oh, that's great, Susan. And if I said, well, I made 20% of the stock in 20 years, you might say, okay, well, that's not so great. Another win that people have is, of course, when simply a stock rises, like stocks that is actually in the green. And we all know, well, sorry, I shouldn't say we all know, countless back tests that I have run in VectorVest in the past, where I have seen that you generally don't need more than 50% of your stocks to rise in order to make money on a net basis in the stock market. I've seen lots and lots of back tests where you might have 43% of winners, but as long as the winners win for longer and more than the losers lose, you can be very much in the green. Number 3, though, is actually a feeling of being confident among uncertainty. Like, you can hear there the way David talks. David knows he's looking at the market. He talks about looking at certain levels on a Monday. He knows he's talking about the pain that's there at the moment, his visibility on when that might be. David knows how to read the room. He knows how to do it. And it's not from yes, it's born out of experience, and it's born out of practice, and it's born out of education, and it's born out of the 3 books that he talks about. And by the way, both Stan and I can attest that David Paul is extremely well read. So there's countless other books that are behind those. And that's also a win. That's a result, is actually knowing what to do. And that was the win that I had with SLV that day, was that I said, actually, I know what to do. I'm going to look for this divergence. But if that divergence breaks, I am out of here. Independent of how much this is going to cost me, I am out of here, because there is no more reason for me to be short that SLV put. And similarly, when it comes to now and navigating uncertainty now at the moment, whether I might look at my confirmed calls or my market timing indicators, or I might sell a stock based on my sell recommendation, knowing what the rule is and trusting my ability to execute on it, that is a win. That's a result. Number 4, of course, is a tidy portfolio. A lot of people talk about this as well, as they like simply knowing that they have, if we take a VectorVest terminology, weeded the garden. They like knowing that everything is in the one place, a bit like those of you who say that you keep your journal. Maybe it is that you can log in at any stage, check how your portfolio is doing. Maybe it is that you know when to expect your dividends. Maybe it is that you have time in the diary to do your taxes long in advance. But again, that's also another method of analysing your performance, is people feel they want a tidy portfolio. I remember one day I'd sold a put on a stock in Europe a long time ago. And the reason I sold the put, I'll be telling you a similar story in a while anyway. The reason I sold the put was it was a top 10 VST stock. Top 10 VST stock. I had ran my numbers as regards selling my put. I was happy, happy all around. I knew what I was going into, and that's where I look at risk-reward ratio when I'm looking at options. And again, I spent a couple of hours here one morning with you all a couple of months ago where I was telling you all about my rationale and how I do that. So I'll leave that for that. You can go back and you can check that out if you'd like. However, it was in there, and I was happy with the stock. I knew that I had sold, as I say, sold the put. I'd end up buying the stock. The dividend yield was high. That's always one of my reasons for selling a put in the stock anyway, if I'm going to go ahead and buy it, and all was well. And then one day I logged in and I kind of said, that stock is up an awful lot. What is after happening with that? And this was the time that the Wall Street Bets gang were driving stocks like GameStop and AMD and a range of other stocks. I'm sure you all remember the language and the methodology that they had around it at the time. And they had picked this in Europe as well. And I said, okay, right, I'm getting out of here because we have absolutely no idea what's going to happen. This is now driven by something entirely different as a part of fundamentals. And I cut the position right away and then took it off the table. And again, it was that sense of knowing, though I had a tidy portfolio, I knew what I had, why I had it, and I knew when I was going to make a decision. Also, what people have told us as well is that they like a feeling of being in control, that they like a feeling of, okay, I know I have my stop loss in place, or I know that the number to call if I have a question about taxes, or I know that every week I'm going to attend Trending Thursday, or every month I'm going to put this particular session in the diary. And then, as I say, number 6, definitely, this is one that I'm seeing again and again and again from that successful investing coach group, is applying a rule and then feeling the satisfaction of seeing it work. So now what I'm now going to do is that I'm going to ask you is, what are your results in your stock market performance? Is it return? Is it a feeling of confidence? Is it a feeling of being organized? Is it knowing exactly what to do? Is it that sense of that I have my rules in place, I have my systems in place? Again, let's just I'm going to have a look over here now. Yeah, I'm seeing here people are talking about Another valuable tool is a quick test feature. Yes, definitely. Yeah, it is. You just, if you're going to do that in your own portfolio, well then the portfolio tool can be more efficient, and that's method number 5. I ask myself my question, what is my aim? Preserve capital, so don't hesitate to sell now and can always get back in. Sue, can I also say another one of Kevin's lines was, nobody ever lost money by making a profit. That certainly is. Tony says good tracking. JM says returns. Steve says, I think Dr. DeLido is brilliant, and it is not because he and I share the same academic field. Okay, yeah, that's good to hear. Following my rules each and every time. Yeah, that's always what I hear again and again and again from VectorVest subscribers, is like the confidence and ability to execute. And that's why I went to method number 1 being what it was. My results are always good. The only problem I have is greed. Yeah, now that's back to behavioral finance again there, Luke. So what I would say to you is, when it comes to considering your performance, is think about what results am I getting for what effort. Now, what is effort? Effort could be time. And a lot of our VectorVest subscribers love putting time into you looking at back tests and considering portfolios and being here, whether it's here with Stan on a monthly basis with the international user group, whether it is being with David on a Monday afternoon, whether it is coming over to see me at Fantastic Female Fridays or the ESG and Tech Show. So think about the effort you want to put in. Is it time? Of course, effort is also money. Is it anxiety? Is it concern? Youth, and that is another really important way to analyze your performance in the market. My mother, she rang me up. Good, no, she rings me regularly, but she rang me. I'm going to say, oh God, it must have been 10 years ago now. And she said, I want to put some money into the market. I don't want to have to worry about it. I don't want to think about it. I don't want to have to make a lot of decisions. I don't necessarily want to lose it, but I know if it stays in cash, it'll either go nowhere. And if we ever have inflation again, like now, well then it'll lose value. And I simply bought a global ETF for her and left it alone. Simples. I left it at that. And what did Ma'am get? She got the average stock market return, around about 10 to 12% compound per annum, and that was it. That was basically it. One transaction, and we just let it go. Just let it go. As you can imagine, not doing great this year. For the past number of years, since I bought it, really, there was a few rocky patches, but on average, that's what she's done. Really, really high results to effort ratio in her case. So think about that. What results are you getting relative to the effort that you're putting in? Okay, method 4 is opportunity cost. Most people never think about this one, ever. And I actually think this is actually one of the most useful ones. Now, I'm a big fan of this author, Nassim Nicholas Taleb, and he writes very well. He insults most of the people he writes to, though I have to say he wouldn't want to be easily insulted, because he certainly slags off the economics profession, much of the investment profession, the trader profession, and lots of others beside as well. But he's a very, very good writer. And I was tweeting him. As you can tell, I like Twitter quite a bit. I was recently over with VectorVest, the team in the HQ in Ohio, and I was reading this on the way home. And I tweeted Nassim Nicholas Taleb, and David actually tweeted me as well, saying this is also a book that he's read. By the way, I've read The Power of Now, David, and we could have a separate literary conversation about that. But in Fooled by Randomness, one of the key themes that he puts forward in this is alternative histories. So I'm just going to give you a very quick example of what that means, and then I'm going to bring it right back to the concept that I'm talking about right now. So he talks about the idea that, imagine that somebody offered you $1 million in order to hold a gun to your head, and there's five spaces in that gun. One of them has a bullet in it. The other 4 don't. And imagine somebody offers you $1 million to take a shot, right? So you hold the gun up to your head, and you have a 1 in 5 chance of getting killed, but you have a 4 in 5 chance of winning $1 million. The thing is that everybody who would have gone through that test, who could have spoken about it afterwards, would have told you they survived. The alternative history is, of course, people would also have died in that experiment, but they couldn't have told you. The alternative history was not necessarily available. Another example he talks about is, imagine if we were to consider the likelihood of somebody dying every day, and the person gets to 60 years, and for 60 years multiplied by 365, and on the 4th year, 366 days a year, they don't die. Well, then could we now deem them to be immortal? Well, no, because we all know that at some stage it happens to everybody. The point is, though, is that if they did die, they wouldn't be any longer in the test. So he talks about alternative histories and how sometimes we don't look at what else could have happened because it's not accessible to us. The difference in the stock market is we absolutely have access to alternative histories. Absolutely. And one of the other things that I would suggest that you do when it comes to look at your performance is look at decisions that you took and therefore what would have happened if you didn't. So I have two that I would like to run by with you on that. One is where I took the totally wrong choice. I did the totally wrong thing. My rationale was right, but the result was totally wrong. And I want to tell you another one, which was absolutely right. Absolutely right. So my opportunity cost was nil. So let me just show you. I'm going to pull up the NASDAQ in April 2020. Now you can probably, so as you know, David talks about that he trades the S&P for a living. Now I don't trade an index. I don't trade them. I sell options and stocks, and I buy ETFs, and I sell options at ETFs, and I do other things, but I don't trade an index. But what I decided to do here was the NASDAQ. I sold an option in the NASDAQ in April 2020. Now it was a disaster, right? So I sold it here. I'm going to say sometime around about here. So yeah, I'm just taking a look over here at yeah, I'm looking here at the comments. Great to hear them and keep them coming. But over this period of time here, right? This is when I sold a put option, and it was ridiculous. It was absolutely ridiculous. It was a good idea because I thought the NASDAQ would rise, and it did. But instead of selling a put option, what I should have been doing is simply buying the NASDAQ. I mean, apart from, I was selling other puts, and I've shared this with our VectorVest audience at the time, but I was selling other puts round about that time frame, and of ones that had stocks that had fallen absolutely massively, and they were rising really quickly, and there was massive volatility there, and I did well in those. But I shouldn't have done this in the NASDAQ. And again, my husband was saying to me, he says, I don't think we should be selling a put. And I said, no, let's sell a put and let's take in the income from that. And then we'll go on to buy the stock, and then we'll end up with the upside. It was totally the wrong thing to do, because the amount of money that I made on the NASDAQ put paled into comparison for what we could have got if we actually bought the NASDAQ itself. Now, should I sit here and berate myself for that decision? No, because, and the book that I am going to read is what David mentioned there about how to make decisions when you don't have when you don't have all the information. What I absolutely didn't know was how much the stock market was going to burst open right throughout the next couple of months. And in fact, 2 years, well, year and a half, let's say. I didn't know that at the time. At the time, it was actually brave. April 2020. It was actually brave to go in at the time. Yes, all the confirm call was up, MTI was up, all that was up. But think of where we were. Think of the sentiment in the world in April 2020. This is long before governments had decided to have really big, significant backup plans for companies and like furlough schemes. This was long before this. This was when we questioned, like, a vaccine. A vaccine was a million miles away. So it was actually quite brave at the time. Now, my opportunity cost was I should have done something else. I shouldn't have done that. And so therefore, I then went on and we made other decisions, and we went back in long in a range of stocks at the time. And I have to say it was a brilliant time to be in the stock market after that. So what am I going to take away from that? Number one was that my opportunity cost taught me that I should have been long a stock instead of short a put option at the time. And then I took that information and I implemented it thereafter. Therefore, yes, it was a learning that I went ahead, that I went on, and that I decided, right, that's the thing to do. So that's an example of that's an example of when you look at an alternative history, you look at what could I have done differently, what information did I have at the time, and using that new information and experience that I now have, what should I do differently in the future? And if you do that, that can really augment your overall education and your results, as well as the actual returns you're making. And I want to show you another time that, as Mick also says, one other thing is to follow the VectorVest recommendation. Sure, yes, and as I was Mick. I was, in essence, it was a buy recommendation, and I was taking an action that was going to lead me towards buying. I didn't end up buying, of course, because the put was way out of the money by the time. So let me go. The other stock I want to show you, this time it's in Europe. Where are we? Over here? Yeah, there we are. So I want to show you this one. I've spoken about this stock a good few times before. Sole reason I bought this, sorry, I sold a put in this as well. It was ASM. It's a Dutch stock, top 10 VST stock, and it was the highest VST stock at the time that I could sell an option on. Okay, so it wasn't the top VST stock. It was the highest stock on the VST list as measured by VST that I could sell an option on. And I sold the option back here in October. It was October 2020. And I remember talking about it because at the time I was on the Hot Stocks panel. I was there with Glenn and Steve, and we were talking about this, and I was pointing out, I remember it was around about actually that period of time the option was expiring. Now, I got a lovely premium, beautiful premium, but the stock expired in the money. Sorry, the option expired in the money, and as a result, I went on and I bought it. Well, I had no choice at that, as in I let the option expire, and then I went on and I bought it. Now, the stock absolutely went rip-roaring after that, and we sold it way up here, right? We sold it here. It was February 2021. Now, at this stage, as you can see, it had a really good run, lovely run. It had delivered a very significant return in that period of time. My dividend yield at the time, around about, I think, 1% when I got it first. And then the reason we bought, though, the reason that we decided to go for this was because, like I mentioned, it was the top 10 VST stock. And then the VST started to turn. And then as a result of that, we decided we were going to sell, and we did, right? So when I say we now, I like, well, would you believe myself, my husband met through the stock market in the first place. We both worked together at a stock market training company. So it's a really enjoyable thing to discuss these with him. And also, like, we've lots of disagreements, but they're educational in their own right. So, and I loved kind of talking it out with them. And then, like, we don't always decide always the outcomes together, but it's a good thing to do. So anyway, we decided, right, actually, we're going to sell this. And I remember him saying, I think we should sell. You know, he said, look, the VST has gone down. It's not a stock that we were overly familiar with in terms of its business. CRH, I mean, CRH in Ireland, you can't drive 10 miles without seeing CRH somewhere. So I wasn't as familiar with this one. Anyway, not that that truly matters, but, you know, it had an influence. Anyway, we sold, right? So we sold, and first of all, it looked like a great decision. But then, as you can see, it went way up, way up. And sometimes I would say, oh, geez, look at this. So anyway, of course, you can see here, it went up to 434. Now, I think we bought, if I'm right, I'd have to go back and check, but I think we bought it around about 140. Oh no, 130. And as you can see, it had, like, you know, multiplied by 300%. It was super. But anyway, as you can see, since then, it's fallen. And if I had simply held on to it and forgotten about it, if I had ignored what David said to you today, which is the market is always changing like it's always done 10 years ago, or if I had ignored the picture that I showed you myself at the beginning to say, well, look, 116 years before the graphics I showed you, the market looked entirely different, like, I'd be back to where we started. In fact, my alternative history would be the same. Is that I'd still be here today where we would have been back in February 2021, because basically ASM has given an awful lot of that back. So this is what I would also encourage you to do, is that when you make decisions, look at what else you could have done, and then take a look at what the impact would have been from that alternative history. And it can be a really interesting way then, a really, really interesting way to kind of pull the whole thing together and to see, okay, am I executing upon my rules? Am I letting emotion get in the way? And of course, the other one is, am I not letting a stock run? Like, if I had no reason to sell ASM except that we got nervous because we were doing really well, that's not good practice. Like, I listened to a podcast this morning about somebody was talking about DCC, another Irish company. I've had DCC for ages and ages and ages and ages, and it's a stock that has risen and risen and risen. I'll just put it up there, DCC. So you'll see, like, it's DCC. I think maybe it trades in the UK. So an Irish company again, I think, though it might trade in the UK. And I've had it so long now I can't remember. But just somebody was saying about, it's a stock that has risen and risen and risen and risen, like, over 25 years. And a lot of the time you can think, I better get out in case. But actually the in case is in case it falls, as distinct to the reason I bought being no longer there. So that is my fourth point, is to consider opportunity cost, consider alternative histories. And you can really learn from that. You can truly learn an awful lot from what did we agree on, or I agree on, what decision did I take, why did I take that decision, what should I have done differently, how my things have panned out, and also step into the shoes of where you were at the time. Like I say, me, April 2020, it was really brave at the time. Picking up and again on David Scotsman, colleague, it was the time to buy, but you won't want to. And I remember thinking, oh my God, we are at the start of a global pandemic. Seriously, like, and it was the right time. It was the right time. And I should have actually been even more aggressive than we were at the time. So the last one is, of course, probably the one you all expected me to talk about, which is return on investment. And what I suggest here is that you use the VectorVest portfolio tool in order to do that. And it's a really good way of looking at everything. Your portfolio tool, of course, is over here. VectorVest 7. Usually what I seem to have to do is close down the slides before we get to that point. Okay, so here we are. Here we have got a portfolio. You click create portfolio, and as you can see here, then you can call it whatever it might be, whatever investment that you're starting off with, or your existing portfolio amount. Put in the cost per trade. Okay, I see here somebody has just said to me, Susan, what would have happened had you bought the NDX call and not sell the put? I would have been in a very different position, David. If I had bought a call instead of selling a put, I would have been in a totally different scenario. However, where my head was at was we were at very high volatility, which made the time value very expensive of the put, and that's why I was doing what I was doing. If I knew now what would have happened, sure, I'd have bought calls all around me. That's what I would have done. Okay, so just to come back over here then, so with what I suggest you do is that use the portfolio tool in VectorVest, and obviously time is moving on now, and I do need to wrap up, so I won't go through a step-by-step guide of how to create a portfolio here, but it is very intuitive and it's very simple to do, and it's really easy then to track exactly where you're at. And also, of course, then you can also edit the fields and so on like that as well, so that it can be quite a robust journal for you as well. One thing I will say though, as somebody who has stocks in the UK and thus sterling, stocks in the US and thus dollars, stocks in euro and thus euro, is that then we can't have one portfolio in VectorVest to consider all of the different currencies. So what I suggest you do is you can always use Google Sheets then for that. So here's one, as I say, that I made earlier. So this is where we have our list of stocks over here. Okay, but actually you can actually code in the live share prices into Google Sheets. So if I want to get the live share price, I'm going to save Amazon. And of course, I know today is Saturday, so live isn't necessarily live, but equals GOO, and then you put up Google Finance. And then if I put in here the ticker code, which is AMZN, and I put it in brackets, what you'll see is that I should also put the inverted commas around it, and then it will actually load up the ticker, the live share price itself. And then you can also do the same for the exchange rate. So for example, if I was to take the euro sterling or euro dollar at the moment, equals Google Finance. And in here, then if I put in currency, EU or USD, okay, and then again, similarly put my inverted commas around it. There we go. You can see that it ties it in. So that's also a way in which that you can use the Google tools to be able to build a dynamic portfolio which keeps up with both the live share prices as well as the live currency exchange rates as well. So on that note, I'm now going to hand you back to Stan. Similar to David, of course, you can find me lots of places right here on YouTube. The next event that is going to be coming up on a global basis is I'm going to, my next ESG and Tech show is on the 19th of October. On that occasion, I'm going to be looking at undervaluation. So just looking at our capability from the point of view of ESG, technology, and undervaluation in general. So of course, if any of you would like to come along, please do. We'd absolutely love to see you. And I put the link here for that show into the slides. But also, of course, if you subscribe to this channel, and you particularly click the button with the bell, you'll always know when any of us go live here on YouTube. So on that note, I'm going to, as I say, hand you back to Stan. Stan, I'm super happy to answer any and all questions or hear any feedback that you might have. Thanks so much again for having me here today.
Hi, Susan. A lot of your questions were answered. Whoop, I've lost your sound.
No, I'm right here.
You're there. Yeah, a lot of your questions were answered, or you answered a lot of the questions that came up as we went along. A lot of great comments coming in. They really appreciated your insights, and I can tell from the chat, the participation has been excellent. And I see Terry said it was keep going, super stuff, and Brian the same. So very much appreciated. I think the way you posed the questions has got a lot of people sort of thinking about their trading methodology, and particularly analyzing their trades. And I think a lot of us talk about documenting our trades, but we don't always do it. But it was coming through loud and clear in your presentation and in the chat that the rules for your trading, were really important. Having a trading, I think Michael Bryden said, having a trading plan is really key to your success. And so that was emphasized and very much appreciated. Yeah.
Well, I do think it's important, and what people might also be observing as I was talking through there is that you may have different rules for different situations, and it could be I'm going to sell based on a sell recommendation, or I'm going to sell my entire portfolio as a result of market timing indicators, or there could be a range of things that govern those, but I don't have the same plan stand for every stock. I don't only sell puts on stocks in order to get entry positions. But it's not important that I don't have the same plan for every stock. What is important is that I have a plan. And I do. And I really do, both on the buying side and on the selling side. And I also, and I talk about this all the time, and I see there, somebody said there that they join me on Fridays as well, and I'm delighted to hear that. But what people who join us on Fantastic Female Fridays will know is that I also know myself well. I know that I'm somebody that likes generating an income, hence the selling stocks with puts, or selling puts, on stocks. I like looking for high dividend yields. I'm not a trader. I'm not David. David and I are not going to go into competition anytime soon. So, and I think knowing yourself and putting your trading plan together and consistently learning, that's it. That's the name of the game.
All right. Well, Susan, thank you so much. We really appreciate it. I'm going to take back the screen and just finish up here with a couple of slides. If I can get that screen, I'll see if that goes on. I have my images on my laptop and my desktop, so sometimes I move out of the, oh, that didn't work out worth a toot, did it? I got to go back in there. Oh, it's on. It just took a while to come. Okay, I just wanted to show you again this stock market masterclass slide, because Wayne Dick chatted in early on after my presentation that the offer for new people, if you're new to VectorVest and you like what you see in the masterclass and today's presentation, the forum, you can go in and get a 60-day free trial at VectorVest.com/MC bundle. So you can get that special offer from yesterday's masterclass. It's still going on. And then again, there's the slides, VectorVest.com/MC slides. And today's slides will go out to all of you. If we have your email address, they will go out to you tomorrow directly from VectorVest. If we don't have your email address, if you've never sort of received slides from the forum previously, then you're going to want to email me at stan.heller@vectorvest.ca. It's at the bottom of your screen now, and I'll make sure I send you the slides. So with that, and these are the product support and training, Monday to Friday, 1-888-658-7638, and these are the international numbers. So I want to say a special thank you to Joey, who's been with us in the background, making sure the technology works, and he's done a great job on that. So thank you, Joey, for that. And just special thanks again to David and Susan for sharing with us their time and their expertise. Just tremendous presentations today. So thank you, and thank you for all the participation and comments in the chat. I think this is one of the liveliest chats that we've seen, and greatly appreciated. So with that, have a great rest of your weekend, everyone. The replay again will be available within minutes. It'll be there on VectorVest YouTube, and you can go back and review and pause and rewind. So thanks, everyone, and best wishes and take care.